Welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today, and we are going to begin with the previous questions. So the previous questions, as we see, are the questions right here. I hope that, let's see, I think the sound seems okay. The first question here is, what is AvaProtect? That we also received it yesterday, and we're going to see what this product is and how we can use it. Okay, so for that, we're going to have a notepad to write down the answers. We're going to paste the question right here at the top, and we're going to see how we can use, just a second, how we can use this product here. Okay, so I would like to say that this product, the AvaProtect product, is a product that can only be found on this interface or on the the app, which is the AvaTrade's trading app. Okay, and also AvaProtect is only for Forex, gold, and silver. Maybe for later on it will be available for other things as well, but currently it's for silver, Forex, gold, and silver. Now, on top of that, how we can demonstrate this product? Obviously, we need to select one of the things written here. Okay, so we can click on commodities, we can click on metals, and we can click on gold. Okay, I could just as much, by the way, type here gold and search. Now we're going to click on the arrows to expand the chart. We're going to click in here to clean the slate. And we will be using, we will stay with weeks. I guess we can stay with weeks. And then we are going to click either buy or sell to open the order entry. Just go with the buy for now. Okay, and as you can see, there is a golden shield at the top and a box here with golden shield as well in here, and it says AvaProtect. What this product does is actually allows us to protect the position. We're going to also type it down. AvaProtect allows us to protect the position for a certain time frame. Okay. Whatever we lost during that coverage, will be returned to our account. Okay. And there is a fee when using the product. Now, what those things are, it's, by the way, you don't have to remember that, because even if I'll point on the I here, it's going to explain to me exactly that. But I always like to write it down like this in a very simple way for us to remember and understand. What does that mean? It means that if, for instance, I'm going to click on the box or on the shield, it does the same thing, by the way. Now I'm able to choose from 1 hour up to, let's click on the plus to expand the length, up to 2 days. Great. So from 1 hour up to 2 days, whatever I lost during that time frame, I will be returned to my account. Great. So let's suppose we're going to click on the take profit and on the stop loss, and let's tentatively just place here a take profit that we think will be reasonable, and the same thing with the stop loss. Okay, and okay, at the moment we can see that we can make 100 possibly, or lose 100. We're also going to click on here and put the rectangle to help us understand the range that we're aiming for. So we're going to do it. We're going to do it like this. The upper area will be the profit area. The bottom area will be the loss area. And as we can see in here, the take profit will be the top, and the current price will be the bottom. Same in here. So we're going to take the top is going to be the current price, and the bottom will be what we aim for. And now we've got beautiful 2 rectangles to mark the area, and we can see that if it goes to 3,400, let me also place a price line on that. Okay, we'll have it in green. and also we'll have a line at the bottom. We'll have it in red. Great. And now we can see that this is what we're looking at. So if we take the position as it is at the moment, we are covered for 2 days. We can see that the fee in this case is going to be $19.81, and then we are covered for 2 days. Now, there are two things that has an impact on how big or small the fee is going to be. One is how long we're going to cover the position. So as you can see, for 2 days, it's nearly $20. If I'll click in here to reduce it to the minimum is only $7.29. If I increase, it increases the fee as well accordingly. And also, if I will increase the size of the position, so instead of having one, we'll have two, that has an impact on the fee as well. If I'll increase to 10, so there we are. When we had one, it was nearly $20. When we have 10, is nearly $200. So we understand that this way we can basically utilize the product much more efficiently, plus this amazing ability to simulate the position with the take profit and the stop loss. And now I know that the proportions that I'm using are quite satisfying. For instance, if I would aim for a much lower price, again, I'm just exaggerating to show what is an example that maybe we wouldn't be happy to use. Okay, so we will as you can see, I've targeted different take profit and stop loss closer to the entry, and now the fee is 200 and the possible profit is lower than the fee, right? And the possible loss is almost as much as the fee. So this way, as you can see, the comparison here is to show us maybe what happens if I wouldn't measure. Okay, because I'm using this product to do what? To protect the position and get my losses back. So I want the proportion between the fee that I'm paying to what I'm aiming to make or lose needs to make sense. So if we go back to the previous numbers that we work with, which is also displayed on the chart, we can see that the proportions here are reasonable. Okay, even if I'll go with 0.5, still it's reasonable, potentially losing 1,000, potentially gaining 5,000 or making 5,000. And I'm sure that in this situation, if I need to pay $1,000 and I let's suppose I lost this 5, and thanks to this 1,000, I'm getting back 5, amazing. Okay, amazing. And again, if I can make 5,000, I'm happy to pay that 1,000 as a fee. Yeah, I hope it makes sense. Again, if we reduce it back to the original numbers that we work with, so we had 0.01, and basically here we are. So if there are any questions about AvaProtect, guys, before I carry on with ease, feel free to ask, as this webinar is a live questions and answers. So you guys are welcome to also, by the way, I forgot to mention, if there are any questions regardless of the topic that I'm teaching, you're also welcome to use the question section and put down whatever question on your mind regarding trading, and I'm happy to write it in my presentation and hopefully give you the best answers possible. Okay, so basically we wrote the guidelines that we should have had to answer the question in here. So AvaProtect, we even wrote this nice explanation here. We're also going to include those things as well. And now we can write it not like that. Just a second. Okay. Yeah. Maybe we'll make it also a little bit smaller. There we are. Okay. Second question in here is, can I use trading for secondary income? Well, that's obviously yes, but this is actually a very a very, very common thing to use trading for secondary income, right? Not everyone who begins doing trading want to make it his career, even though a professional trader can make a lot of money, right? This field trading is a universe, but to use it on top of something, let's suppose versus let's place a few options in here, okay? So let's say job type A will be full-time job, okay? B will be part-time, okay? C will be obviously we're going to keep it like this because this could be interpreted to so many different things, right? We've got full-time and part-time, and whoever is not employed, this question does not apply for him, I guess. Maybe we'll put here, we'll leave it like this. So obviously if I have a full-time job and I need to I work every day, how can I still trade? Because I need to work and I need to trade. I also want to trade. So I can make a plan that can go along with my lifestyle. That depends on my job time frame, right? If I work at the day, I can trade afternoon, right? And if I work in the afternoon, maybe I can trade in the morning. And also, I don't have to trade every day. So to break it down, of course, I can use trading for secondary income, but I would make a plan that can go along with my lifestyle and doesn't require me to give up my job to trade. This way, I can design a plan that I feel comfortable with and still make progress. I can't unfortunately give any specific examples, but I hope that my explanation makes sense. So I'm just going to write it very simple. Trading can be used for secondary income. It is advisable to find a plan and strategy that goes along with my lifestyle. Okay, it doesn't have to be something too crazy. As long as I can maintain it with my work and still make progress, then I can always evolve and add more and more layers, more and more instruments once the system is running. Okay, so we're gonna take that, we're gonna paste it in our right here. Okay, must I trade? The next question. This is exactly what I was talking about. Must I trade every day? The answer to that is absolutely not. I'm not obligated to trade every day to make profits. Of course not. But let's see how it can work. I think we can carry on with gold for now. We're gonna just expand the chart, take advantage of what we have here. So let's actually even use what we've got here. Okay, let's maybe use it to explain the scenario. It's a shame that I took off the rectangles. Never mind. Okay, we're gonna keep it like this. Keep it like this. We're gonna turn the rectangle to what they were in just a moment. So this was 3,400. This was green. Yeah, currently 3300. Now, this is an excellent example to a position that we've designed that doesn't require me to spend a minute on the chart because of the way that it's constructed. Okay. Oh, one more thing that I wanted to say about AvaProtect that I almost forgot in the beginning. The expiry on the positions that we're choosing is right here. Right here, we can see when it will expire, the coverage, and we cannot expand the coverage. So as you can see, 2 days is the max, but I cannot expand from 1 day to 2 days after it's already happening. So I need to choose it in advance what I want to be covered. Okay, just a side note. Now, on top of that, I can also automate my entry. So we've got 3 pending orders. We've got execute when price hits, take profit, and stop loss. What execute when price hits is actually a pending buy or a pending sell. Take profit closes the position with the profit, and stop loss closing the position with the loss. Now, in this scenario, once I have launched, just a second, the position, the way that it's constructed, basically I don't need to, because everything here is automated, so I don't need to, unless the market changed the direction or I want to do something else at the same time. Okay, but in this scenario here, everything is automated. My entry is automated, so it will open the position if it reaches 3,300. The take profit is automated to close it with the profit if it gets to 3,400. And 3,200 is what we targeted the stop loss. So if it gets to that level, it's just going to close the position with a loss. So to answer the question, must I trade every day? It is not mandatory to trade every day to make profits. We can use pending orders such as execute when price hits, take profit, and stop loss to automate our entry and closing. And as we can see, this position here is designed to be held maybe for a week, and during that week, as long as the market goes to where I wanted, I don't need to do anything. And even if it goes against me, I know exactly how much I can lose, okay, which is 100. Now, on top of that, let's maybe see if we can use another example. And also, I wanted to type that there are types of trading styles, such as swing. Let's maybe begin with scalping. We've got scalping, intraday, which is also intraday weekly, and we've got swing. What does that mean? I'm sure everyone is familiar with swing, because swing is really, I wouldn't even call it a trading style, but still, it is a trading style. It's a long-term trading style. Scalping will be minutes, probably minutes to maybe even hours. I don't want to say hours because it's not so common, but minutes to hours. Fast-paced trading requires full attention while trading. Okay, because I'm expected when I'm scalping, basically I'm expected to observe. Let's switch to small time frames, like a minute. And when I'm scalping, as you can see, if I'll choose, maybe we'll go with 5 minutes. Okay, you can see now. You can see that this is. No, I wanted the trend line. Just a second. Yeah, and as we can see, this happened during 2 hours. Okay, what happened here is during 2 hours, give or take, even 1 hour, I would say. This is up to 1 hour. This is 2 hours. The whole time frame here. Okay, and when we're scalping, since this is 5 minutes candle, we see that this in here, we could take a buy, still we're in a buy, and in here we could take the sell, maybe maintain it, or again keep doing scalping. Of course, I can also look at 1 minute and still take advantage of of what we're looking at. So this is scalping. I need to be active on the chart. There is not a lot of point using pending orders. We can, but again, it's very, very fast. That's basically what I can say about scalping. Of course, the potential, the profit potential is insane. The same apply with the loss potential. So it does require a level of sharpness and experience. This is not something I would maybe do as a beginner without getting more familiar with the concept. Okay, so scalping, we wrote what it does, what it means. Intraday weekly will be obviously days to a week, up to a week, maybe even 2 weeks. No, let's say a week. All right, let's say 2 weeks, up to 2 weeks maybe. But this is at max, because I think beyond two weeks to a month, it's already entering into the scalping category. So what does that mean? It means that I typically open position. I can open position today, say Thursday, and then maybe I review it again the following week or maybe next week. But in this trading style, we design positions that are supposed to be maintained over a day. Okay, over a day, not limited to a day, but more than a day. Even though it's important to say, if this happens faster than just a second. Okay, if this happens faster than I anticipated, I'm not going to be upset, right? If we get to where we wanted faster than a week, it's quite amazing. Okay, but if it doesn't, I'm not going to be stressed about it, because I know I've designed the position to be held for a week, well, more than a day, and I'm prepared for it, and this is how I can design it. Okay, so this is let's say midterm trading up to 2 weeks from, let's say, holding a position for more than a day up to 2 weeks. Okay, 2 weeks is also considered a lot. It's not under the intraday, but I've included it under the intraday anyway. Okay, just for us to have a simple explanation, and the list that so it doesn't get too long. And swing is obviously just, let's say, 2 weeks up to even years, right? Months and years. So for instance, this is also an excellent example. When I swing, let's, okay, as an example, let's switch to months also. Okay, something happened here. Let's change it. There we are. Okay. Okay, so now just this one more. Okay, we'll stay with weeks for now. So this is what we're looking at, is weekly candles. Okay, and as we can see, this is NVIDIA. Yeah, this is NVIDIA. It's still showing us gold because we clicked on the search bar. Keep in mind that when you're switching from one instrument to another, you want to ensure that the right instrument is displayed. Of course, NVIDIA's values per stock is not 3,200, and it's also written here gold. So what we can do is just click here on buy, and here we are. Even though the market is only going to open in 2 hours, but still, just to explain about swing. So if we see that this is since April, right? This is 4 months ago, and we see so this, we can hold it for so long, and we don't have to trade every day like the question here is asking, right? We can hold it for as long as we want, and we can design the position this way that we don't have to trade every day and still make progress. So between scalping is something I wouldn't recommend for someone who's working full time and is very busy during the week, because it requires us to pay attention and through the whole session to be concentrated on the screen. So not everybody is able to do that during the week. Of course, intraday weekly, to my personal opinion, is the most common one, since it's up to a week and it allows you during the week to do whatever you want, your activities, and still have life and trade. Swing is obviously, I think, the lowest impact on a lifestyle, because I can open a position now. As long as I'm making profits, I can visit it in a month, even in 2 months. Okay, that almost doesn't require me to make any changes. Okay, so we're gonna take that. We're gonna also paste it in our presentation. I hope that it will let us do that. It's a bit messy, but let's see if we can, if we make it smaller, if it will. Okay, so we can still. Just a second. Okay, so, well, I've tried, but it doesn't seem like it's letting us do that. So unfortunately, I would recommend everyone who wants to know the trading styles again, just to watch the recording. Oh, also I think that the numbers got scrambled. Okay, never mind it. As long as we have the question here. All right, the last question is how to measure the total exposure of my account. We'll take it, we'll paste it right here, and then we can see that with this question, how to measure. First of all, what does that mean? The total exposure of my account. Okay. When we trade, it doesn't matter what we trade. When we are taking a position, let's maybe go with one of the indices. Let's specifically go with NASDAQ, because this is another great example to show you what a bullish trend looks like. Okay, even if we switch to days, we see NASDAQ is thriving. So with this question, I need to measure. What I want to do to measure my exposure is, I want to know how valuable I am with the balance that I have and the position that I took. Meaning, what is the potential loss that I can have from a position, and how significant impact will it have on my account? So if I'm able to somehow calculate the exposure for one position, of course I can calculate the exposure for my whole account, and then I know how vulnerable I am and to do proper risk money management. Okay, we're using NASDAQ. Current price for NASDAQ is 23,780. Sorry, 776. But when I clicked in here, it suggested that number, but I don't think that it's too bad. We're going to flatten that entry to 23,800, and we're also going to enable the take profit and the stop loss, and we will increase by let's just quickly apply an indicator here that will help us to assess the average. And I choose the average true range. I've selected 10 for 10 weeks. Click save, and now I know that NASDAQ has the ability to move $815 per week. Okay, so since I'm planning to hold this position for a week or two, I can even go for 1,000. If it can move 800 per week, I guess 1,000 in 2 weeks is not too much to ask. So we'll make it 24,800, and at the bottom this can be 22,800. And now we're looking at 1,000 and 1,000, and we are with 1 in the C. Okay, great. So how does this? So how can I check my exposure? Obviously, 1,000 out of 10,000 is 1%, right? But still, we are in a webinar, so we can have a formula to make our life a little easier. Let's put the name of the instrument. Let's also put the entry here. Entry 23,800. Possible loss is 1,000, and the stop loss is 22,800, and we are with a buy, just to be clear. Now, how can I measure my exposure? Possible loss equals 1,000, and what is my exposure? Okay, so to find the exposure, possible loss divided by balance equals factor times 100 equals percentage exposure. Okay? We're going to do it together, so we will take the 1,000 we've got in here divided by the balance. That's 10,000, and that is. Let's do it with a calculator together. So we did 1,000 divided by 10,000. That's 0.1, and then times 100. That equals 10, right? Okay, so if we do this times 100, it's 10, and now we know that this position means we are exposed using the stop loss. Who can tell me what is my exposure if I don't use the stop loss? What is my exposure if I don't use a stop loss? Who knows? Can I even measure that? Or it's limitless? If I don't use a stop loss, let's see what can happen if I don't use, okay? So the stop loss that we thought about was 22,800. We'll paint it in this red line, and we'll have the worst case. We'll paint it in blue or turquoise. We'll have it like this, and this is, let's place it where it's been a month and a half ago, okay? Maybe a little lower than that. Maybe we'll go to the 20,000 mark. Okay. So if we are with one, we notice that for every dollar Nasdaq is moving for us, we can make 1,000. For every dollar that it moves against us, we can lose $1. So if it moves 1,000, we can make or lose 1,000. If it moves 2,000, we can we can make 2,000. If it moves to 20,000, let's see from where we are. So that's 22,000. Sorry, 23,800 minus 20,000. That's 3,800. So if we wouldn't use stop loss and God forbid it gets to the blue line, we will lose 3,800. If God forbid it goes to the last support line, which was, let's see how long ago, around half a year ago, give or take, less, much less, 4 months. So if God forbid it gets to here, how much can we lose? 73% of our account. Okay, so let's keep it on the original stop loss that we had with only 10%. It's not really only, I wouldn't say that 10% is only, okay, because we need to also to think the question here is not the exposure for one position, is for the whole account. So how does this work? It works, okay. Let's suppose that on top of that position, I have another position with Dow Jones, okay. I could just type Dow and then it would find it, but never mind. Okay, so let's suppose we have another position also with Dow Jones, and we will let's make it the stop loss this time. We'll go a little farther down. We'll make it to 40,000. I think this was also roughly 4 months ago. Okay, and we can see that we can potentially lose 4,700. So how can I? What does that mean in terms of my exposure? We'll also flatten the entry the same way we did with Nasdaq. Okay, and we will take 4,000 off, and now we can see that the possible. I know that it looks very bad, but I'm trying the message that I'm trying to convey. Okay, so the exposure in this case will not be 10%. It will be 10% for Nasdaq, and it will be another 4%, 40% for Dow Jones. So how can I measure? To measure the exposure for the whole account, I need to accumulate the exposure for the whole account. I need to accumulate the possible loss. I need to accumulate the possible loss of all of my positions. Okay, this way I know how exposed I am. And as I said, if I don't use any stop loss, there is no limit to how much I can lose. Okay, if God forbid it gets to here, okay, at the bottom. So let's see. Oh, sorry, we are with a buy. Should have been at the top, right? This is our entry. We'll keep it like this. Our take profit can stay the same, because again we're not focused on that at the moment. And the stop loss, we're using this support level. I know it's a bit extreme, but just to convey the message. Okay, so if I don't use any stop loss, and God forbid Dow Jones get to here, I'm gonna potentially lose a big chunk of my account. So a stop loss can be very handy, and it also can help you measure the possible loss. Okay, without any stop loss, there is no limit to how much I can lose. Therefore, there is no way for me to measure my exposure. My exposure is 100%. You want to put it like this. If I don't use any stop loss on any of my positions, my exposure is 100% in terms of the loss, because there is no limit to how much I can lose. The same thing would take profit, by the way. If I don't use any take profit at all, there is no limit to how much I can make. But at the same time, if I don't use any take profit and the position turns around, so my profits can also be affected. I hope that it makes sense. So I'm going to also include that in here. How can I measure? So the equation to measure this is very, very simple. I guess we can maybe take it a little higher. So possible loss divided by balance equals factor, and then times 100 equal okay, very, very simple. There's nothing complicated to it. We just did it on a calculator very easily. Okay, so the third bit, as we spoke about in the beginning, is this slide here to share with you the links. We've got here a link for additional education, which I'm going to send you via the chat. Okay, the second link is for the help and the FAQ and the help center. Okay, and the third one is for a real account. If you're still playing on a demo and you want to get down to business and really practice with real live market. And lastly, the academy, which is now also accessible via the on the website, and I'm going to show you how to get there with no no links needed, and without even to leave the website. And before we do that, I also want to grant you guys the special promotion code, the Q&A benefit. This means that since you've participated in this webinar, you can also enjoy a one-on-one premium market review with your senior account manager to sit together, look at the market. You can ask whatever questions you want with no obligation and no additional charge. And that is just wonderful, so you can use it. And I've pasted also for you on the chat. And on top of that, we're going to look how to get to the academy right from here without leaving the website. Okay, so let's suppose that we're here, and this is probably the default screen that you're going to see getting into the web trader. And it's important to say that this interface you don't need to install or download anything to get here. You just need to log in with your email and password, and this is the web trader. Right here at the bottom, at the end of the first segment, we've got this above the chat. We've got this play icon. In this play icon, we've got two options. One is tutorials and one is the academy. And if we click on the academy, this is where we're going to go. And the second one, the tutorials, actually the first one, the tutorials, takes me to here and opens the tutorials right away on the website without just, as we can see, we can click here, play, and here we are with translation and everything, just like that. I can educate, and it's great. Okay, so take advantage of that. Unfortunately, we're out of time for today, so I would like to thank everyone who participated. I hope that this could be helpful and you've learned today some practical tips in order for you to implement in your own strategy. You're all welcome to join us next week as well. Until then, I wish you all to have a fruitful week. Best of luck with trading and have a good day.